As we enter the final month of 2022, is there a Santa Claus rally in store for the stock market? We take a look at the possibilities in this week's Fastest 4 Minutes in Finance. Hello again, and thanks for checking us out here on the Fastest 4. I'm Scott Inman. Well, there's only one more month of 2022, and I think we're all ready for this year to be over, at least from an investment perspective. What we would really like is a big rally to end the year and make the wounds of 2022 a little less painful. So what are the chances of that happening? Well, from a historical perspective, only once has December proven to be the worst month of the calendar year, and that was in 2018, not that long ago. There's no other month that you can make that claim for. December has also been positive 75% of the time. It's also important to note that historically, the Santa Claus rally typically occurs closest to when Santa actually arrives. Since 1950, the first few days of December have been fairly flat, with modest gains in the middle of the month, followed by the strongest gains in the final 10 days of the year. Working against the optimistic historical record, though, are two things: midterm elections and year-to-date performance. When there has been a decline of more than 15% from January through November of any given year, the December return on average has been down 1.4%. Also, midterm election years over the past 20 years have proven to be a negative predictor for December returns, down 1.3% on average. Of course, history only takes us so far. What still matters most is the economy and stock fundamentals. And the main influencer of both of those right now is the Federal Reserve. As we've discussed before, we are watching to see if the Fed's aggressive strategy of raising interest rates will bring down inflation and slow down the economy without crashing it. Unfortunately, that crystal ball is still hazy. If you're watching the Fastest 4 on video, take a look at this graphic showing how tighter Fed policy has dragged down future GDP projections. The blue lines are actual quarter-over-quarter gross domestic product. You can see the robust growth of 2021, followed by the first two quarters of 2022 when the Fed began hiking rates. Both were negative, and that led many to declare a recession. But so much economic data has remained strong, including a GDP rebound. You see the first yellow number on the chart indicating projected GDP growth of 1.4% in Q3 of this year. Well, that was the prediction at the end of September. We have now actually grabbed that number, and the revision of it released in November was actually 2.9%, leading some experts to comment this is the strongest recession we've ever seen. That chart, by the way, is part of our Financial Security Town Hall coming up Tuesday, December 6th at the Delta Hotel in West Little Rock. We'll be discussing the economy, retirement, and Social Security. It's free to attend. Just go to getreadyforthefuture.com/academy to sign up. Thanks for listening.